Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be covering our weekly recap for May 14th through the 18th. I'm going to try and make this week's quick, so we're going to cover the three major indexes, go over some after hours movement, some stock news for the week. A couple stocks we'll be covering is EAT, which is Chili's. We have Home Depot, Macy's, Nike, JC Penney's. We're going to talk about a retail REIT if you guys are interested in some retail, Apple, Teavana, and then take a look at oil, housing ETF, silver, gold, and bonds, and kind of end it there for our weekly recap. So let's go ahead and get started. If you are brand new to my channel, I do make stock market, real estate related investment videos. So if you're interested in any of that, go ahead and hit the subscribe button, hit the notification button, because I put out content every single week. So of course, consider subscribing for future videos. So let's go ahead and get into it. This week, all three indexes were down. S&P 500 down 0.54%. Year to date, still on the positive by 1.47%. This is expected. I think I covered this on my Monday video or Saturday video. I expected this week to be in the negative just due to retail earnings getting released. So earnings that, we're actually going to cover a couple stocks that did their earnings. But S&P 500 down slightly. Dow Jones here down 0.47 in the 5-day change, still in the negative for the year by 0.02%. Again, expected. This is an interesting article I found. The Dow is doing something it hasn't done since the 80s, and it could signal new highs. So it basically kind of covers how the Dow has had its 200-day moving average. It's been trading above its 200-day moving average for 472 sessions, which is the longest stretch since 1984 through 1987. It's also saying that in the first quarter, the earnings were close to the strongest results in the last 7 years, as the S&P 500 also tracks a combined 26% increase to their bottom lines, meaning meanwhile, the U.S. economy is set to expand by 2.7% in 2018. Tax reform, that's going to help these companies. It's going to bring so much money in, and you're going to see a very nice shift here. I think we're going to see some movement after June with the Fed, deciding whether to raise rates or decrease rates or keep them exactly where they are. I think, in May, we're not going to see too much until the Fed kind of comes on and kind of announces whether stocks are going to go up or down. NASDAQ had a little bit of a fall, the furthest fall this week. 5-day change down 0.66%, still up year to date by 6.53%. So all indexes were red. Is that anything to be alarmed of? No. If you go to my channel, click on my playlist and go to my my stock market weekly recaps, you can take a look here at the thumbnails. We had a 2.5% gain last week, nearly 2.5%. All indexes were up in the positive by more than 2%. This week, we're only down a half a point. Week prior, it was so. Apple earnings hit. That was the big thing 2 weeks ago. Prior to that, we did have a little bit of rocky tonk. Apple was getting sold off prior to earnings, and Apple being sold off prior to earnings. So a lot of that Apple here was in the negativity going into earnings. So I think this is very nice here. I expected a little bit of a cool down this week, maybe next week as well. But in the next couple of weeks, I do think we're going to continue to see that growth just because of tax reform, and retail is actually kind of bouncing back. So we're going to cover a couple of retail brands here. Not LB. I was just kind of taking a look at that here. So after hours, let's see here. Oh, my other after hours went out. Anyways, I closed out my other after hours one. Anyways, so some of the major stocks that were kind of moving in the after hours: PayPal, Zynga, Bank of America. We got Ford, Cisco. So Cisco, they did their earnings. They went down, I think, 4% this week. They did beat estimates. They did beat revenue. But I believe their sales or something was a little bit low, which caused a bit of a sell-off in Cisco. CenturyLink has been on fire lately, up. Boy, they are up like 18%, I think, year to date. If we go here, let's see what this should have been EAT. But I'm not going to cover Cisco too much. That's not one I have been tracking. Comcast, Facebook, lots of stocks are making some movements here in the after hours. So I think that's really good. The majority of it is for the positive, so I like to see that. After hours here. Yeah, that's the one I like to see. The futures. So right now, futures are looking a little bit negative as far as the S&P 500 and the NASDAQ. So Friday, if you put in some limit buys, say a half a point below where they kind of closed on Friday, you might get some good buys. And then throughout the rest of the week, you could possibly see a bit of a turnaround on the indexes because retail's kind of out of the way. The stocks that did fall, they fell. You can actually take advantage of a couple of the sell-offs. One of them, let's see here, which one? No, I don't think I'm covering any of the major sell-offs besides one, but there could be a couple in there if you're looking to buy, such as Walmart. Walmart did fall by, I think, 2%. WMT. Oh, they actually, yeah, they fell 2% on Thursday due to earnings, but they're actually positive by the week by 0.31%. I think Walmart's going to be turning around here shortly. I think they're just kind of working out their online and they're picking up groceries and such. I think once that kind of turns around, you're going to see some better numbers. So Bricker International, ticker symbol EAT. This is mainly Chili's. Let's see here. I skipped over my article here. So eat at Chili's. Your debit or credit card information may have been stolen. This article was written and they released it on Sunday that the grill and bar had actually fallen prey to data breach by thieves seeking payment card information. This came out on Sunday. Monday, opening up, the stock did fall roughly 4%. Off this information, a couple of their other brands include Mangiano's. I'm not familiar with that one. That one's not on the West Coast as far as I know. And so if your information was stolen, you should probably check with your credit bureaus and just ensure that all of that stuff is on the lockdown. But 5-day change down 4.11%, still up year to date by 11.84. Home Depot did their earnings. They did not. So shares sold off by 1.6%. So Tuesday they did their earnings. They sold off by about 1.6%. This is all over the media headlines. Not a lot to really talk about this week. There's no Fed. There's no nuke talk. There's really not a whole lot of talk. So this week, man, we had KFC on the news. We had Home Depot on the news. So it was a pretty slow week. So Home Depot made headlines. The retail chain reported earnings that were better than expected, but sales came in lower, which caused them to kind of have a slow start for the start of the year, whereas normally it's very strong during these spring sales. But because of the extended winter right now across the Midwest and other parts of the United States. I know here in Oregon, I'm on the West Coast, we're hitting 80 degrees, nearly 90 degrees some days. We're going out to the lake tomorrow, or today on Saturday. When you guys are watching this in the morning, I'll probably be already on my way to the lakes to go hang out. So anyways, so right now, Home Depot, I believe they're going to be turning it around. Right now, they're not doing a lot of their spring sales. Not a lot of people buying grills, gardening supplies, lawn furniture, as the temperatures haven't really risen as much, so they're still kind of in that long winter. So I think this is a good buying opportunity if you guys are interested in checking out Home Depot, Lowe's. Definitely check them out. So Lowe's were a little bit lower as well on the news of Home Depot being low. Macy's broke into some highs, 5-day change up 14.57%. This is one I don't hear many people invested in. It's retail, so everyone's always dreading Amazon. But check out that year to date, up 34.82%. So Macy's broke new highs on the year, adding 14.57% for the week, or 10.83% on their earnings. So this is all thanks to better than expected earnings. One of the key metrics that the analysts had looked at is the store sales, and they came in much better than expected at 4.2%. Analysts were only expecting 1.4%. So the CEO came out talking about consumers are doing healthy spending. They're getting paid more. There's more job opportunities out there for people looking for jobs. The job number in comparison to the people that are out there looking for jobs, I think I posted it on Facebook. There's more jobs available than there are people looking for jobs. So there's definitely opportunity out there. So I know a lot of entry jobs, you're going to be starting at $14, $15 now. So in some areas, depending on the job, the entry level job. So that's great. I think that's great. On the news of Macy's doing really well, Nike jumped up as well. Nike is a seller at Macy's, so they saw some shares move as well into new highs, adding 2.65% on the news. Nike was actually one I had considered adding to my portfolio when I was a dividend investor. They were down in the $40 range back in September and July when I was looking at building my dividend portfolio. I had looked at Nike, it had great looking numbers. It's local here in Oregon. It's a state ran company here in Oregon. So I had actually considered added it to my portfolio to just be, invested in my community, not so much in my community, but in my state. So year to date up 4.02%, 1 year change 38%. So very good looking there. Now, other end of the stick, who got the shaft? JC Penney's. So JC Penney's tanked by 12.38%. They had blamed it on longer winters, but it actually was their revenue fell by 4.3%, and that same store sales came in well below 2% growth mark. So Wall Street wasn't having it. The company tried to blame it on the performance and on the longer winter, but yeah, Wall Street investors said no. You guys are dropping down. So year to date, they are down 17.43%, and the majority of that is due to this week. I don't shop at JCPenney's. If I go to the mall, I don't go to the mall. Honestly, I'll order my jeans on Amazon. So not going to lie there. Retail ETF. If you guys are looking to kind of get into retail, last week we kind of talked about an energy ETF. This week we're kind of talking about retail. So retail ETF out there to check out is ticker symbol XRT. So this one has a whole bunch of stock. This one's very diversified. Most of the portfolio weightings are only 2% or less. So we have Guess, we have Ultra Beauty, we have Rent-A-Center, Abercrombie and Fitch, Chico. So it's very populated with retail. So if you're looking for a diversified ETF, check this one out. In other news, Apple was on news this week talking about how institutional investors had sold off and reduced their holdings by over 153 million shares. But as you know, just last week or the week prior, Warren Buffett had added 75 million shares to his portfolio. So that's half and half. But this is actually the financial media had actually pointed out this is one of the largest decreases in holdings and since the financial crisis of 2008. But I think this is a smart move as we're kind of moving forward. Apple is held in many institution ETFs. It's holding it's a big portion of people's portfolio. It was my entire portfolio for about a month. I bought Apple at 162, between 162 and 168. I sold off my shares now at 181, 183. I'm completely sold out of Apple. I'm actually transitioning my money now. So Apple, that news right there. So news that the financials were kind of decreasing their shares by 150 million shares. I think that's what kind of caused Apple to kind of simmer down, not shoot up as much this week as it had been in the past. So I think this one's going to start to simmer a little bit. We may still see Apple hit $200 mark within the next 3 to 6 months. So talking about Warren Buffett announced that he was going to be buying some more Teva. I think that's not the correct brand. So it is. So Teva was the latest stock to feel Warren Buffett effect. Today on, I think it was Thursday or maybe Wednesday. It looks like Wednesday. So sometime this week, Berkshire Hathaway announced that it had increased its position, and the pharmaceutical company shares were higher by 3% on that day. So yeah, Wednesday, Warren Buffett came out saying that they're added to Berkshire Hathaway. As you know, they're looking to with Chase, J.P. Morgan. A couple other stocks, I think it was like Microsoft. They're all looking to kind of do their own internal pharmaceutical medicine, stuff like that for their employees. So I think this is kind of, I'm not sure if that's along the same ways, but great pharmaceutical company. 5-day change up 9.94%. Year to date up 12.03%. This is a fairly inexpensive stock. I think this one is not done running up. I think this is the good. buying opportunity right now. It's dipped nearly 28%, 28.45% in the last year. So I think this could be a good buying opportunity. But again, do your research, check its balance sheets, do its 10Ks, let's last quarterly report, earnings, and see why it took such a huge dive here back in late 2017. And kind of going in, what's our last thing? Campbell's Soup. What was the big news on that one? Campbell's Soup fell by 15.5% on Friday. What was it? I think it was the CEO. Yeah, CEO abruptly stepped down. So it was really unexpected. The CEO, I forgot, I don't know his name, Morrison, I think it was. He stepped down after being within the company for 7 years. At the same time, the company had reported on earnings, had a loss of $393 million for the quarter. The loss was mostly due to the charge-off of $645 million for its fresh division. So, as you know, there's a huge push right now in the markets for healthy foods. Whenever we go to the store, my wife will not buy us, let us buy anything with high fructose corn syrup. Has to have low sodium, has to have low sugar. We're trying to decrease our diets. We're trying to live a little bit longer. For every ounce of sugar that your body takes, it does so, X and X, to your lifespan. So I think a lot of these companies, they're pushing to be a little bit more on the fresh end, on the healthy end. So stocks such as Coca-Cola, they're not as diversified. They're only in these sugary sweet drinks. I think they're not going to be doing so hot coming up during the end of this year. But I didn't cover Coca-Cola. I haven't really tracked it at all. I guess I could just type in KO here and just take a look at how they've moved here. But they are up 0.09. They are down for the year by 8.06. I don't know much about Coca-Cola. Home Builders just posted their worst day in 3 months. This was posted on Wednesday, but I think this is very generic. So home builders in my area are on fire. We have there's actually multiple home builder companies within building in specific cities. So there's ranging from brand new houses starting at 240 up to $380,000, depending on whether you want a 3.2 or a 5.2, 5.3, style. Houses are getting built like crazy. The percentage of houses on the market to the demand is it's not there. I believe there's 33% more demand for the houses. I forgot what the numbers were. I was listening to like a real estate podcast here that takes place here locally, and they just talked about the numbers. There's much more demand right now, and they're pumping out houses right now. They're constructing houses. You can build a house here for less than a little bit over $200,000, but as soon as you have it built, it's built with equity in it. So very nice there. But this article kind of just talked about key levels to watch. I don't see it. I think, are you buying home builder stock? I'm not buying a stock myself. I'm buying real estate within my own network. I don't know what I just clicked there, but I'm buying, says 28%. I'm not buying here, 72%. So I myself, in my market's on fire. I live in Oregon. I have people coming up from California. They're selling their $700,000 homes and moving to Oregon, where you can buy a home, in Southern Oregon for starting 250, 275, up to, there's $1 million homes here in Southern Oregon, but you can also do anywhere in between there as well. So I do see a lot of movement from Washington and Oregon, so that's why I kind of gonna want to get in that. Let's see here. What else we gotta cover? We got some construction ETF. Okay, so the construction ETF I had taken a look at to kind of compare it here was ticker symbol ITB, which is down for the 5-day change, down 1.31%. 1 year change up, still 16.65%. You can see here as of January, this one kind of followed suit with the market itself falling down with rising interest rates. People right now, to me, it feels like people are diving in the houses. It doesn't matter if rates are going higher. I myself, I wanted to move into a new house because rates are increasing. I don't see them sticking at 5%. We're at 4.75%. I work at I work at a financial institution. I work at a credit union, and we're raising rates, with the Fed, and those are getting raised up nearly every quarter, nearly every 6 months. We're expected to have three in 2019, three additional ones in 2020. So I can see us having a 7% rate by 2020. I could see us having a 7-8% interest rate just to get into a home. So people are diving into these homes with cash, multiple cash offers. Brand new house comes on the market, there are multiple offers. Yeah, it's crazy. Oil made a little bit of a continuation, continue to grow up, continue to move up 1.26% barrel. I think, let's see, I don't think I have my numbers for oil. No, I don't have any notes for oil. I think oil rose to 70. I think it topped out like $76 a barrel. But great oil ETF is USO, up 1.26% year to date, 20.15. They're saying in the news right now that oil is continuing to grow. They're going to see it at the $80-$90 barrel mark here very soon. And I could definitely see energy, oil continuing to grow. So if you're an oil investor, you're looking for some energy. We talked about an energy ETF last week. Go check that one out. Otherwise, check out ticker symbol USO for United Oil Fund. Silver and gold. Silver went down this week. We had gold as well go down a little bit. So silver down 1.4%, gold down 2.0%. Gold itself had fell to $1,300 an ounce for the first time since December as the dollar shot to new highs. So dollar is going up, gold is going down. So there's always that balance there. And if you guys are interested in buying into a silver trust, check out ticker symbol SLV. If you guys are looking at some gold, check out ticker symbol GLD. So as the dollar goes down here in the future, well, with inflation, you're going to see the dollar rise. So you're going to see gold and these materials begin to decrease. So this could not be a good time to buy. But bonds are way oversold. So I knew there's another channel, and this is all over the news, that our 10-year yields are trading at new highs. I believe it hit 3.6 or 3.06, somewhere around there. And those are some new highs. So where the 10-year yield reached 4% by year end, I said no. I don't expect the 10-year yield to hit 4%. I think they're going to continue to sell it off in order to keep the market high until midterms, and then we're going to see some sort of action happening during the midterm elections. We're going to see some movement either up or down. And I think that's kind of coming up. So right now, they're going to continue to keep those 10-year treasury yields right around that 3%. They're going to either sell them off to kind of keep them below 3% or kind of keep them right at that limit. So that is basically it for this video. That is what I wanted to cover. Okay, I almost forgot about my research tab over on Merrill Edge. So let's see here. Let's click on some read more. Let's see here. So stock market stumbled this week. I don't consider it a stumble. This is just kind of a simmering, not a stumble. Again, remember last week we went up 2.5 points. So this is not a stumble. This is just a kind of simmering. Retail stocks were doing their stuff, and I expected a little bit worse, but this is actually great. Macy's did really well. Nike did really well. Home Depot had a little bit of a pullback. Walmart continued to kind of trend up very nicely. So I think next week and the following week, I think we're going to go into some positive numbers again. So Dow did lose. Again, we read over that Dow article. Dow's trading in the 400s day, nothing falling below 200-day moving average. Earnings are looking really well. New tax reform, so very good looking right there. They had talked a little bit about this company in China, ZTE, beginning to kind of move back. President Trump announced over the weekend that he's working to get Chinese phone company ZTE, which is suffering due to U.S. sanctions, back into business. I believe they're trying to sell their phones. I think these are the 1+1 or the 1+2 or the 2+2s. I think that was the brand. They didn't want to bring them in because they could be security They could be loaded with software that's either meant to spy on us, and that's why they were originally kind of blockaded, and that kind of caused their stocks to kind of fall. But we're trying to create some sort of, pull the sanctions down a little bit to kind of help that out. International stocks, major stock indexes tumbled, nearly 3% this week, and its 10-year yield shot higher by 35 basis points. So international indexes and yields are not as high as ours, so we're definitely a little bit higher. Let's see here, what else? Of course, Treasury yields. Talked again a little bit about Walmart. We talked Home Depot. We hit Macy's, Nordstrom. Didn't talk about that one. J.C. Penney's. We talked about that one. Let's see here. So Home Depot, J.C. Penney, Nordstrom. Their short sales fell short on same store sales. Boy, I cannot read right now. It's 2:30 in the morning, so my eyes are a bit fuzzy. So I'm gonna go ahead and pause the video. Zoom in here. You guys can go ahead and pause the video, read through the article, and I think that is it for this week. I'm going to go ahead and end it there. So again, I want to thank everyone for watching up until this point. If you did like the video, like the information that I covered, if you got something out of it, go ahead and hit the like button. If you're brand new to my channel, hit the subscribe button. And of course, as a friendly disclaimer, I am not a financial advisor, tax professional, CPA, lawyer, attorney, any of the sorts. This information is my personal opinion for entertainment and fun. This is not investment advice. This is just me as a financial investor trying to help others make their money work for them, talk about some news on the market, and thank you guys for tuning in. I will see you next time. Have a great day.